You sell me 100 of these apples for $1 a piece. So I'm going to give you $100 for 100 apples. Now, once I have these 100 apples, I can either choose to sell them or I can hold on to the apples. But there's actually something else I can do. I can write up a contract. Now, let's say you or somebody else out there wants to buy these apples from me, but not today. Let's say they want to buy next week, Friday, and they're willing to buy it from me at a higher price. They're willing to buy 100 of these apples that I paid $100 for, but they're willing to buy it at $120. Only if the price goes past $120. And right now, for me giving them that contract today, they're going to give me, let's say, $5 for that whole contract. So I just made $5. You paid me $5 for a contract that I just made up out of thin air. Now, let's say Friday comes along. Two things can happen now. Number one, the price of the apples in the market do not reach $120 for 100 apples. Therefore, I keep my apples. You lost $5. That's pretty much it. But you were okay with that because that was the risk that you were willing to take. The second is that the price goes to $120 or $125, let's say, and now I have to exercise that contract and I have to give you my 100 apples, but you give me $120. So either way, I still made money. Welcome back to Key Talks, guys. Today we are talking about covered calls. Let's go. Welcome back, guys. So covered calls is an amazing strategy to make some passive income. Now, a lot of investors will say that it's not as passive because it does involve just a little bit of work. And what that work entails is actually writing up the contract. So a couple of things that you need to know. In order to do covered calls, first things first, you need to be able to buy 100 shares of a stock. That is the minimum. One contract equals 100 shares. Another thing you need to know is that you need to have options enabled on your account. Now, if you're in Canada and let's say you're with RBC or TD Bank, all you need to do is give them a call. They'll walk you through the forms that you need to fill up, sign, and send in. And once you send that in and it gets approved, then you'll have options enabled on your account. Now, if you're using a registered account, you can do covered calls, and you can also do covered calls on a non-registered account. Now, there are a lot of option strategies that you cannot do in a registered account. For example, there's things called cash secured puts or selling any kind of puts. You can't do them in a tax-free savings account or a registered retirement savings plan. However, you can do it in a cash margin account. So that's something that you do also need to know. When I explain covered calls to people or my friends, the number one example that I talk about is the casino. When you go to the casino, who do you think always wins? Is it the house? Or is it the guy who just is trying to make a little bit of money and gamble? Most likely, in majority of the cases, it's almost always the house. The casino always wins. So when you are exercising a covered call, you are the owner of an asset. In the case of the casino scenario I just gave, the casino owns the assets. They have the cash. They are the ones that are writing up these contracts. Just like that, when you have stocks and assets and you're writing up contracts, you're winning. So that's very important to understand, and I'm going to explain why later on. Now, let's say someone who's just, working at McDonald's and they're making minimum wage, but, they're living below their means and they're able to save a little money, and then they buy something that's safe or secure, like an index fund, or even something like Apple stock, one of the top 5 tech companies, Apple or Facebook. And they continually invest in that same stock until they eventually, after like 3 years on the road, let's say, are able to save about 100 shares. Once they get 100 shares, they're able to exercise covered calls. And by doing so, they can actually earn up to 30 to 50% of the amount that they earn per year. So what does that mean? That means if you have like $100,000 in Apple stock, you can make about 30 to 45 or 50,000 per year. That's amazing. Now, there are obviously risks to this, right? One of the biggest risks is obviously what happens when your option call gets exercised. Right, like if you have 100 shares and then you write this contract up and you're saying that the stock is not going to go to this price, when you sell it, yeah, okay, you made money, but let's say, in my Apple scenario, it doesn't go to $120, it goes to $150. Well, you just missed out on that gap. Right? So that is the risk that you're taking. However, when you're doing this with safe and secure stocks, when I mean safe and secure, I mean investing like Warren Buffett, not day trading, not other forms of investing, not following the market news and buying a stock and trying to do a covered call on it. Because it's very, very important to only do covered calls on stocks that you believe in for the long term, that you're willing to dollar cost average in, and that you want to actually hold. And the biggest reason for this is if you buy a high growth stock, or a stock that you're not wanting to hold for the long term, and then you have that in your position, and then you exercise a covered call, and something happens and the market tanks, let's say, and you want to get out of that position, well, now you have to buy back that contract. And if you choose to buy back, if you do, and a lot of people make this mistake, and if they buy back the contract instead of letting it just expire, then they just pretty much dig themselves into financial burden. Why? Because now they have to spend way more money than they actually got paid. So that's something that you want to avoid. And a lot of people don't avoid this and get themselves into a bad situation. So the only way to avoid this is to invest like Warren Buffett. Look for a stock that's undervalued, that you believe in for the long term, and don't associate this with day trading unless you know what you're doing. And options trading and day trading is extremely different from just doing covered calls as a passive investment. I know this was a very short video, guys, but I just wanted to give some insight into what covered calls is to open and broaden some of your guys' minds. Now, this is something you definitely should look into, and I'm going to definitely make a more detailed video on the intricacies and the details surrounding covered calls and how exactly you can do it. And I'm going to make a video of myself doing a step-by-step walkthrough of a covered call from Monday to Friday, from the time that I actually write up the covered call to the time it either expires or it gets exercised. Again, thank you guys so much for watching this video. I really do appreciate it. I really hope that you guys will subscribe to my channel. My goal is to reach 1,000 subscribers by as soon as I can. So please like this video. It really helps for the YouTube algorithm too, so it pushes out the video to other people. Thank you guys so much for watching, and take care.